I passed 2 Apex evaluation accounts. What next? Coming up in this video. Okay. Hello everybody. So I passed 2 $50,000 Apex evaluation accounts. I'm on day 5, so I'll start those. Yeah, 6, day 7. Tuesday, I will start those. I want to go over my plan moving forward. I want to help those of you who maybe are struggling to pass the evaluation account, whether it be with Apex or Top Step, and go over a couple things. So the way I was able to pass these accounts, and now I'll show you where I'm at here. Okay, so here are the 3 evaluation accounts I have right now. I just started this top one today, just as a tune-up kind of deal, trading micros, and I'm up 159, which I'll take. And these accounts, these evaluation accounts, turned out to be really good for me. Worked on some issues I was struggling with, and I traded them well, and I'm happy about that. I'm looking forward to moving into the performance account. But the key here, and this is very important, is sizing. If you think that you're going to trade with Apex, the 50,000 account, you can trade 10 contracts max. If you're going to trade the max all the time, you're probably not going to be successful. And there's, it's just over leveraging. And so we don't want to do that. Obviously, I've tried that. I've done it. Everyone has. You're not going to succeed in that. If you get lucky and get the performance account that way, you're going to lose the performance account because you it's a lottery ticket you're trying to win here. And it's just not longevity. It's not just go. And I don't recommend playing the lottery. But basically, if you're going to do that, you probably have better odds, honestly, at going to a gas station and getting a lottery ticket. So that's not what we want to do. I traded the NASDAQ on these 2 accounts, and I've been back and forth between NASDAQ and ES. My style and how I trade, I think the NASDAQ works better for me. You've got to make your decision. Either one can work. I've passed evaluation accounts on the ES, and I've passed them on NASDAQ. I blew them up on ES, and I blew them up on NASDAQ. So ultimately, it's about you. Your biggest hurdle to get over in trading is going to be staring at you in the mirror. Okay. So the way I passed these, I was trading 1 to 2 mini NASDAQ contracts at a time. There were times I would get up to 3 or 4. Moving forward in the performance account, I'm going to actually be going down to macros. And I'm going to be trading 5 to 10 macros. I have a range there because depending on the day and the range of the day, it's about managing your risk. Days like yesterday where, the NASDAQ was, let's go back and look at it. Minimize this. If we go back yesterday, well, we're being slow here. Let's zoom out. Okay. So if we go back to yesterday, we had a low of 79, and it just kept going up into the close. But if we look at the close, so we closed around 780s and was in the 580s at the low. 200 points. All right. So over in here, this is more like a normal day. I'm comfortable trading up to 10 macros. Once I see something like this, immediately I'm trading no more than 5. And even, over in here's where I actually passed the second combine trading 2 macros. I needed like $50, I think, to get over the goal. And I traded 2 macros. Actually got short and got out on this when it pulled back down. Took profit. So there's plenty of money to be made trading macros. I'm not trying to push anything. I'm going to have 2 accounts, so I will be doing the trade copier and copying the 2 accounts. So it'll really be doubling. So if I make, like, today I'm up, let's pull it back up, 159, so that would be 320 basically. I'd be up between the 2 accounts. That's an awesome day. Okay, so my goal, if we lay this out, and let's see here, let me do this. Wrong button. So just in case anyone else wants to follow along here. Here's my goal. 500 profit. No. Come on. Okay. 500 profit. Then 500 max loss. Yeah, sorry, my typing's a little off right now. Okay, loss. Okay, 500 profit, 500 max loss. 5 to 10 MNQ. That's the macro. Now, all of this I'll set up in my broker to where it's going to keep me honest. So I'll set it up where 10 is the most. That's the most contracts I can trade. Once I hit 500 max loss, I'm out for the day. Something I'm going to do as well, if I'm down 300, I'm going to take a break. Okay. So that's going to be important. I want to do this right here. So 500 profit, 500 max loss, 5 to 10 micro contracts. If I'm down 300, I take a break. For it could be a 5-minute break, 10-minute break, just reassess, breathe, come back at it. If I hit the 500 max loss, I'm done for the day. There's no taking a break. The break is the rest of the day. But if I'm down 300, I'm going to take a breather, try to get back to scratch, or, if I can get into profit, that's great. But it's once you hit this point, if you get back to break even, you're doing good. I'll fill that out, but my structure for these performance accounts, 500 profit, I'm out. 500 max loss, I'm done for the day. 5 to 10 micro contracts, max. Once I'm down 300, I'm taking a break, at least a 5-minute break, come back, and I can trade again later if the opportunity presents itself. If I stick to this, I've got a good chance of holding on to these accounts. where I've gotten into trouble in the past, and if any one of you have tried this, everyone goes through this. So basically, you end up down some money, try to win it back. You probably will one or two times. You'll be down 1,000, you'll be down 1,500. You'll make it back. You'll make it back and then some. And where you was once down 1,500, you finish the day up 1,000. The next time you're down 1,500, you're going to think you can do it again. And I'm speaking from experience. But this time, you're not going to make it back. You're going to lose more. So what do? You size up. You're not trading good, but you size up, buy that lottery ticket, so to speak, and you're so frustrated, you're to the point where you're like, if it works, great. If it don't, oh well, I start over. You never want to get to that point. So by having structure, I'm hoping to avoid that, and I'm hoping maybe it can help someone else avoid it that watches this video. So that's the structure of my day. When I get up in the morning, I know I will not lose more than $500 per account. I also know that I'm not going to make more than $500 per account. But that equals, with two accounts, $1,000. So if I can't make it on $1,000 a day, then I need to reevaluate. If $1,000 a day, at this point in my life, if $1,000 a day is not good enough, then I'm being too greedy. And I believe most people watching this could say the same. The goal would be to reach a point where it's not enough as far as I want to make more. But starting out, and this is a performance account, in my situation, $1,000 a day is wonderful. And I should not be more greedy and try to get more, because that 500 profit can turn into a blown account quick. Okay, so I need this structure. Everyone needs this structure. You can change the numbers, okay, but you need the structure. Okay, this is my plan. Now, that's what a day is going to look like. Strategy wise, here we have a 5-minute chart. I've got, 20 EMA, 8 EMA, VWAP up here, volume over here and down here. So you got a volume profile. This is a price based. This is kind of time based. But regardless, I use volume in both areas. But the main thing I'm looking for in a 5-minute is this triangle, whether it be green or red, and these squares. A square says this candle is kind of a breakout candle, so if it breaks out up, you can take a long. So I could take a long over this candle even, and it got a good scalp. Go short under it. As you can see, we just went crazy to the downside, 100 points. We had the big red triangle, and what I'm looking for is this. When I see this, I'm going to go to my 2-minute, and I'm going to look for volume above average volume. So when I see at 12:55 this candle closing, okay, when I see it closing and I see a red triangle, I'm not going to get in right at the close unless the volume's already in there. Like this candle, the volume was there, I probably would have. I would hope I would have. I've been done for the day, so I didn't get in any of this. But that is one that you potentially, you get in at the close. But what happens a lot of times, especially on these big candles, they'll back up a little bit. This one did back up some. But I'm looking, okay, I'm seeing here above average volume, very bearish candles. 8 is crossing under the 20. I'm going to go ahead and get short. But I'm going to get short in the 2 minute and manage my trade risk to reward wise in the 2 minute. And that keeps my stops tight. I've watched the 2 minute a lot. I'm comfortable reading the 2 minute. Pretty comfortable reading the 5 minute. But the 5 minute just I don't want to stop up here. If I'm getting in at 775, I don't want my stop to be 820. And so, maybe I get in around this area, the 60s. I'm, getting in at a lower point. But I can tell you right now, my risk would have been probably over this pivot around 84. So about a 20 point risk. You can see what it did. And I would have been kind of trailing this. Maybe it would have got me out on a pop. There's not really a good pop to even get you out. So it's very possible I would have got profit around this pivot point if I was actually trading it. So obviously hindsight is 20/20, but these are the kind of moves I'm looking for. Even here at like around 11:45, we have the green triangle. I'm looking for volume. We had volume. Let me switch so we can see where we're at here. We had volume come in, above average volume, come in right here. We had a high volume right there too. I mean, you see it's pretty close. But I've got this moving average on here. It's a 5 simple moving average. If I get volume above that average, that's what I'm looking for. And I'm also going to look at the candle it produces. That is key. So look at the candle that this produced. Look at the candle this produced. Closing on its high. Closing on its high. Or right near its high. This is very bullish. At a level of support. Yesterday's close. Very bullish. I've got very bullish 5 minute candle. I've got the long signal. I've got some lows put in here. Basically a double bottom. Basically a double bottom. Go long. Looking for a good target. Try this leg. And if I have VWAP right here, I'm going to try to short run this. But it don't quite get this, but you manage the trade. I would have been out. If I'm getting in here, I might would have been out after this pop, because I'm following it pretty close. But then what would I be doing? I've still got this big triangle, still looking kind of bullish. I'm looking to get in again. This, I'm not getting in because we've got a wick here and high volume, above average volume. I'm waiting to see what this does. When volume starts kicking back in right here, I might get long. Volume is, and what happens sometimes you get volume and you got a wick on each end, running right into support. I could be looking to get long right in here. I'm still green triangle over here. It's still looking bullish. So I'm looking for these different places to get in and get out in the 2 minute. As long as I've got a green triangle over here, as long as I'm looking bullish, I've got 8 over the 20 in the 2 minute. 8's crossing over the 20 in the 2 minute. So there's multiple scalp opportunities. I'm trying to get, if I can get 10 points, it's really what I'm looking for. I'm trying to keep my risk around 10. Like I say, sometimes on these bigger moves, I'm looking to get 20 and I'm risking 20. That's about the most I want to risk. And I'm going to size accordingly. So, and a lot of times I'm looking for these measured legs, these measured moves. It got close here. It ran into the 200, yesterday's high and VWAP and all that, and just tanked. But this kind of, as long as I'm working towards this mark, I'm watching for the 200. I'm watching for VWAP. So that's why I'm trailing stuff pretty close. If I get in here, I think worst case scenario, I'm getting out in here. 805. So that's 5 points. That's $100 in a mini, or if it's 10 micros. If I'm trading 5 micros, that's $50 times 2 accounts that I'm copying. So take that $50. This is what I want to get away from. I want to get away from, and this is what has bit me so many times. I cannot tell you how many. Getting in right here and not closely following with the. You don't want to do it too close. You got to get a feel for this. But staying trailing my stop, and I manually do it. A lot of times I'll use low, previous candle lows. When this candle forms, this is, and it's lunchtime, I'm probably moving my stop up under this. Worst case, I've got it break even. It's a break even trade. By the time it moves up, if I'm seeing movement like this, I'm break even. I'm not going to hope. Well, I'm going to keep my stop down here, because here's what I've done in the past, and this is what would be tempting to do. Get in. You got a nice bar. You got some volume coming in. Just get in. And here's a swing low. I'm going to put my stop down here. I'm going to get in right here at 804. I'm hoping it hits 820. 15 points. I'm going to put my stop below this swing. It's probably going to hold at least till it hits here. And what does it do? It gets real close. Bottom falls out. You're stopped. You lost 20 points. So the risk reward wasn't terrible on that. But imagine this, if you're chasing it, you're out, break even. You're out, for 5 points. You take smaller wins that way, but you will hit some home runs. You will hit some home runs. This kind of trade right here is the kind you'll catch and you'll make good on. These happen, maybe 4 times a week, typically. 3 times a week. And you will make bank on these trades. But in the meantime, you're going to make small wins. And those small wins can get you to 500 really quick. If you're taking these big losses, it's going to get you. Especially with Apex, with the trailing drawdown. So, I want to get in. I want to make sure, and this is my goal. I do not want to lose money. I want to follow things close. Look at this trade. Let's see if it. Okay. Just for example, this is a combine. All right. I want to put you on this, okay? So, I'm on the NQ. I'll show you something. Let's go with the MNQ. All right. So just on a micro, one contract. That's probably gonna stop me out right here. Okay. So if you're trading this, maybe it didn't stop me out. Let's just close this out. So if you're trading this, I'm gonna give you some more screen here. So let's just say, okay, I'm going to go short. This isn't necessarily, I'm not getting the green arrow, so it's not a long yet. So I'm saying, man, it's been taken, which is, 120. This is what I'll be doing. So I'm going to get in, just to give you an example. If I'm getting in short, okay, something's haywire here. Hold on a second. I think we got some lag issues. Let me get this right quick. I'm trying to give you a little example here. Okay. So, get in short. I'm going to trail. I want to give it some room at first, okay? So I've got my ATM strategy. I've got my stop set at 10, profit at 20. It's 2 to 1. I'll move these around though. I'm not, that's not written in stone. Okay, it's starting to go my way just a tad. I'm going to give it a little more room. And I might lose on this trade. Who knows if I'll win or lose. But I'm okay with the risk. I'm going to put my risk over the ADMA. It's over these highs, these candles. And I'm going to see, really, I like to target the 80s when I'm in this area. So now that I've got a little bit of time has passed, I'm watching this close. And I've clicked on my, let me do this. I've clicked on my stop. And my stop's still up here, but I've got it clicked and I'm moving it. All I've got to do is make one more click and it's going to put my stop in. I'm giving it room. Say it's 1 micro. I'm looking for it to hit my target. If it does, it does. If it don't, it don't. But as soon as it starts moving my way, okay, now I'm going break even. Okay, see how it moved my way? Now, my job is to not lose my account. My job is to not go out of business. So, that's what I'm working on. Now, it went down. I'm just going to get out. Yeah. It's because see how it went down and then came back? And right now, it's just lagging. But it's probably already out. It's just not showing it on the screen there. So I'm out. I'm not waiting until it gets all the way back here. When it shows me some strength, I'm getting out. Same way with the other side. Okay, if I'm going to get long. And I guess we're lagging again. Let's just get out. I'm trying to show you guys some examples, but it's not wanting to cooperate. I'll try to do this again. We just got some lag because I'm recording. This is live. This is the live market, so. Just trying to show you a trade the other way, but now it's going to go down. Alright. So, if I buy, I'm just saying buy here. Let's see if we get, still going to be lagging, ain't it? Anyways, you can see I'm going to be trailing this thing tight. Oh, let's just close out of there. I'm going to be trailing this thing tight. So, it's not wanting to cooperate too good with me right now because of the internet connection, I'm guessing. But, let's see if I can. I'll try it one more time. So I want to give you guys kind of an example of what I'm doing. Because it's working great for me. It doesn't work for everybody. Some people want to hold. If you're going to hold, you need to use the appropriate size. And that's the key. That's the key. But yeah, this thing could tank some more. It's not wanting to hold 700, but I'm trying to give you a long example. If I can do it. Obviously, I'm not getting the green arrows, so it's not, like I say, not exactly my strategy, but I'm trying to show you how I'm managing the trade once I get in. So this is important. I want to go over. So I've got the strategy as far as my day, what my day looks like. And what is that? 500 drawdown, I'm out. 300 drawdown, I'm taking a break. 500 profit, I'm done for the day. 5 to 10 micros is what I'm going to be trading every day. Max. That's strategy. That's the day strategy. Now, strategy as far as entries and exits. Well, entering the trade, I'm going to look for the big arrow on the 5 minute. I'm going to look for volume in the 2 minute and a good candle in the direction of the arrow on the 5 minute. So if I'm getting a bullish arrow, let's see. I'll use an example. bearish arrow, volume in the 2 minute, I'm going to go short. Where do I get out? Well, I'm going to trail this baby close, and if it hits my stop, I'm out. I'm going to target starting out, it's going to put in an automatic target of 20 points. I'm just going to be looking for areas of interest. Some people call that supply and demand, support and resistance. I like areas of interest just because support can be resistance. Resistance can be I got tongue tangled. Resistance can be support. Support can be resistance. So you can't really say, well, it hits this area, I'm going to go long, because that can bite you. But when you have a lot of price action at one price, that is an area of interest. It may be that the market bounces there. It may, sell off there. But it's an interest level. That's where I want to take profit. If it hits my target, I'm going to be trailing it. So it may, a lot of times, most of the time, if you watch me, it's not going to hit my target. It's going to hit my stop because I'm trailing the stop pretty close. And I'm okay with that as long as that stop's in profit. So I might make 5 points 10 times. Then one time, I'm going to make 20. One time a week, I may make 30 points. On a move like this, it could be 50, 60 points. But I'm okay taking the base hits with a home run every now and then. But even if I hit a home run, I'm swinging to hit a base hit. If it happens to go over the fence, great. If it don't, I'm keeping my losses to a minimum. So you've got the strategy for the day and profit and loss and that kind of deal. You've got your entry and exit strategy. So it's two different things, but you need that structure of all of it combined. And what happens is there's days where I have some of it but not all of it, and that's where I hurt. And I want to put it all together. Hopefully anyone watching this video, you can put it all together as well and have a nice victory at the end of the day or at the end of the month where you're profitable and you pass combines and you're actually withdrawing from the market instead of putting money into it. And so that's where I'm striving to be. That's where I want to lead others as far as if they can learn from my mistakes. I'm not a financial advisor. I'm a guy on the internet. So take this with a grain of salt. I'm just sharing with you what I'm doing. If it can help you in any way, you do what you can do, what you feel comfortable doing, and work with that. But hopefully by me sharing this, it can be some entertainment value, if nothing else, and give some people some ideas and brainstorm how you can structure your day, how you can structure your evaluation period so that you can pass. And then once you pass, get in that performance account, carry those good habits into the performance account. Because if you have good habits in the evaluation, more than likely, or I'll just say this, it'll be easier to have them in the evaluation, in the performance account. If you have bad habits in the evaluation stage, you will have bad habits in the performance account, because even when you have good habits in the evaluation, they can turn to bad because of emotion when you're trading to actually get money. And so we want good habits in the evaluation stage. Let those carry over to the performance account and hopefully take money from the market. And that's the plan. So it's a lot to cover in this video. Hopefully you get an idea of how you can pass a combine if you're with Top Step, how you can pass an evaluation if you're with Apex, regardless of what you call it. Pass the test so that you can be funded like I will be next week and actually make money. Be good at trading and enjoy the reward for that. So I hope this helps, and I want to remind everyone to be patient and to be profitable.